That blowout jobs report, according to the Labor Department, the U.S. economy adding 528,000 jobs in July, double what analysts were expecting. Unemployment rate also dropping to 3.5%.
What was interesting was this was a surprise, right? No one expected to see a number this large.
Job growth, Carl, really surging in July. And to my mind, it counters this call that we've slipped into a recession. You just can't have a recession with this kind of job growth.
The U.S. economy has now regained all jobs lost during the pandemic, after a blowout July jobs report that showed a gain of 528,000 jobs, according to data released last Friday by the Bureau of Labor Statistics. While it's difficult to say for certain whether or not a recession is coming, we can look at the current state of the economy and make some educated guesses. In today's video, we will explore why Cathie Wood believes the employment situation is not as rosy as the headline. This Friday's strong jobs report is nothing but a double-edged sword. Curious to know why? Stay tuned to the last. And if you're new to my channel, don't forget to subscribe for more videos on economy, market, and crypto. Let's now dive into the video.
We've been saying we're in a recession for quite some time now. Now the statistics are bearing it out. Not employment statistics yet, and we'll get into that in a moment, but the GDP statistics. So real GDP growth has been negative for 2 consecutive quarters. Now that's what I've always viewed as a technical recession. Usually there's not much pushback to that, but there has been this time around. But one of the confirmations that we're in a recession are the leading indicators. So there's a leading indicator index that the government puts out every month. And whenever it has shown 3 consecutive months of decline, as it has, we have been in a recession. So we got that confirmation as well.
Many experts, including Cathie Wood, believe that the country is currently in the midst of an economic recession, especially after getting 2 consecutive negative quarters. But still, one of the most important indicators of a recession is employment. And last week, we just got Employment Friday. And we have gotten a really stunning report. If you look at it, it's a pretty healthy report that seems to defy what's happening in the overall economy. I mean, we now have the unemployment rate at a half-century low. The job market in the US in July was strong, adding 528,000 new jobs, which came as a surprise amid layoffs in the tech sector and elsewhere. Economists had expected almost 300,000 new jobs. The unemployment rate also fell to 3.5% from 3.6% a month ago. Still, after all this, Cathie Wood believes that the employment situation in the United States is looking increasingly bleak. Stay tuned as Cathie Wood explains the employment data and what this Friday report could mean for the future of the economy.
One of the puzzles is employment. The employment number came out today at non-farm payroll, an increase of 528,000. Expectation was 250,000. And so big surprise on the high side of expectations. Wages were higher than expected. Hours were revised up in previous quarters, hours work or the average work week. So we'll see how much this is subject to revision. We won't be able to tell for a while. But employment is a lagging indicator. These headline inflation measures are lagging indicators. And in trying to understand if that number was real, what is it? And when you take apart the index, what you find is that there were more women. The disproportionate number of jobs created were for women, and we're beginning to wonder if perhaps these employment numbers are picking up a person who has taken on 2 jobs. And there are various measures of employment. This one, it's possible that is happening, whereas the household employment measure, which is a much broader survey. It's not of corporations, it's of people in their homes. That measure of employment, it moved up. I think it was up 179,000 this month, but much weaker than non-farm payroll. And if you look at the last 4 months, it has dropped by 200,000. So it's quite weak over the last 4 months.
At first glance, this healthy report seems like good news, but now it creates a chance that the Fed will hike rates by at least 75 basis points in September. You see, what normally is good news for the economy, that is more people employed and earning a paycheck, has become a symbol of concern as inflation continues to remain above the Fed's target. Let's get into the next clip where Cathie Wood discussed lagging indicators of recession. But before diving ahead, be sure to like and share. Always appreciated.
The reason we don't believe that employment is that strong is almost every other employment indicator that we have been monitoring is telling us that employment is weakening rapidly. If you look at initial unemployment insurance claims, they bottomed at, I believe, around 170,000, if I'm not mistaken, and we're up about 55% since then. 55%. That is the fastest increase in that measure of unemployment that we have seen in a recovery. In a recession, in a recessionary period since 1969, which is as far back as we went in terms of analyzing this. So that is saying something's changing pretty radically here. I mentioned household employment. The Challenger survey of job cuts, those are up 59% on a year-over-year basis. And I think they measure reductions in force, announcements. And we've noticed many of our companies are laying people off. And then we got this week the ISM and the PMI indices, Purchasing Managers Index, and the employment indicators in both of those are more manufacturing oriented. The employment indicators both contracted, as did the order indicators. So all of these are corroborating this notion that these strong employment numbers will be revised down.
Cathie Wood doesn't believe that employment is as strong as the headline number suggests because every other employment indicator is telling us that it is weakening rapidly, which includes the unemployment insurance claims. To conclude, Cathie Wood is a firm believer that these strong employment numbers will be revised down and that recession is happening. Thank you for watching. We have more Fed meetings ahead, and after these reports, most are betting that the Fed is going to have to get pretty aggressive. Now, how aggressive can the Fed be? Are these strong employment numbers really good for the economy? Let me know your thoughts in the comments below. And if you find this video informative, be sure to like, share, and subscribe. And also hit that bell icon to never miss any video. I'll see you all in the next one. Adios.